Welcome to the Real P&L Trading Show, where every week I show my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. And I also share my proprietary Safe Wheel strategy for free here. All right, so let's get started here. I want to make sure that everything's working from the tech standpoint. So if you guys can let me know in the comments that you can hear me okay, you can see me okay, and everything is working, that would be very helpful. Also, be sure to post any questions that you might have and post those questions earlier rather than later so I don't end the broadcast and miss out answering your questions. Any questions you have about options trading or trading, I am open to. All right, let's start with the earnings edge. And where are we with the earnings edge? So you can see the account here. Did not make a trade last week. There was nothing that fit through the filters. So you can see how much I'm up for year to date, 11,400. I started this account in the beginning of this year with about $6,000. So I'm up about 11,400 using the newest upgrade, the 3.0 earnings edge. So what is the Netlick? 16,794. It's probably going to be the same thing if I bring the spreadsheet over. Same thing as last time. Oh no. Okay. Well, I didn't. 16,794. Okay. But this is all accurate information. The last thing that I traded was MU. Made just over $1,000 on that. Since I've been updating to the 3.0 system, 13 wins, 1 loss. That's a 92% win rate. I don't expect the win rate to continue to be that high, but it is what it is here. 13 wins at an average of $916. 1 loss there. Obviously, the loss was 516, and that's the average because it's only 1 loss. All right, let's see what SPY is trading. You can see that the earnings edge in 2025 is up 177%, doing quite well. Let's see what the SPY is trading today. 597.64. Let me put that in here. So the S&P is up 2% this year to date in 2025. You can see that the earnings edge 3.0 system obviously outperforming 177% versus 2%. Obviously, there's a little more risk with the earnings edge. You're going to have more risk than the S&P 500. Okay, so the earnings edge, nothing to trade last week. Nothing went through the filters. Let's talk about the PL5 Pro. This is where I have a majority of my liquid assets into the PL5 Pro system. You can see what it did. I started trading this July 19, 2024 publicly. I did to the end of 2024, so the last 6 months, I did about 16%. The market was up 6.65. Let's see where we are now. Literally going to show you my account net liquidation. Let me get to the right account. 527. I believe it's this one. Yeah, 409,115 is the net lick today. 409,115. So let me put that in there. 409,115. So it's up a little bit from last week. So it's still down 12 to 13%. So I am having basically the worst year that I've ever had trading this system, and it's down 12%. That's the worst year. That's what happens in the worst year. Let me update this spreadsheet. This is F27. I don't think I saved it last week. Okay. So you can see that the PL5 Pro up 1% and the market up about 8.86%. So underperforming a little bit here since I opened it up on July 19th, 2024. That's okay. I expect this to recover. And I did make a tweak to the trade because I did see a drawdown heavier than what I had expected and what I hadn't seen in the back tests. But okay, so that is the PL5 Pro. Let's talk about the PL5. Okay, this one is specifically designed to outperform the S&P 500. Let's see how it's doing. I have this in an Interactive Brokers account. And you can see there's 31,817 in the account, 31,817. down a little bit from last week. So down about 3.78% year to date. The market's up 2. If you take it from the beginning of July 16th, 2024, when I started this system, uh, the PL5 is up 6.06 in the market up 6.1%. So they're basically at breaking even. So they're right neck and neck right now with the S&P 500. I expect it to outperform the S&P 500, and we'll see how time goes. And we'll see what happens as the market goes by. So that is PL5 and the results of the PL5. All right, let's talk about the safe wheel. What's the account, the safe wheel account looking like? Let me bring that up. Okay, so correct account here. Netlick 5601. Okay, so let's bring the down about $100 this week. All right, so the safe wheel in 2025 is up 2.21%, the market up 2.07, so it is outperforming, but you get about half the drawdowns with the safe wheel as you will with the market. So on a risk adjusted basis, it's outperforming because you can kind of double the nominal rate. And you can see that the safe wheel since inception is up 12%, but you can really compare it to the S&P 500, probably about 24% on a risk adjusted basis. And you can see the safe wheel since the beginning of 2022, or the S&P 500 since the beginning of 2022, up about 26%. So you can see they're on a nominal basis underperforming the safe wheel, but on a risk adjusted basis, about the same as the S&P 500 since 2022. Okay, make sure if you have any questions about any of these products or safe wheel or anything like that. By the way, the safe wheel for a limited time, I'm making it available. The course, the whole thing. I've got the chart, the flow chart, and everything. It tells you exactly what to do when. It's a black and white system, and I'm making that available for free. I used to sell that, right? And it's basically for sale. But for now, right now, I'm giving it away for free. So you guys hit the link in the description. You can get access to it for free right now. I'm not sure how long I'm going to keep that special going. Okay, so that's a safe wheel. Let's actually trade the safe wheel. So I've made every safe wheel trade except for my little long calls on Fridays. I've made every trade right here live on YouTube. Let's see, which one is it here? Okay, so this account, let's take a look. All right, so last week I sold a put at the 2850 level and I got assigned. So now I own 200 shares. So this is the most amount of shares that I will own. I'm not going to add to this position here. So I won't sell any more puts. I will not have more than 200 shares long. So I'm pretty much maxed out on how much capital that I'm going to allocate is 200 shares here to LI. Now I've got two places where I got assigned. I got assigned at $30 and I got assigned at 2850. I got assigned at 2850 last week. So I'm going to see if I can sell that 2850 call. But before I do that, I'm going to look at my put hedges, my hedges here. So first of all, I've got this long call. I paid $5 for it. I pay $5 for a long call every week, just in case there's some type of takeover bid or something. So that's a hedge. And then I hedge this position here, these three long puts. And I look at this first, and the question is, do I own 200 shares? Yes, I do. So have these three long puts paid off? In other words, am I up more than when I'm down on the shares? And the answer is no. So I'm up $42 on the hedge, and my shares are down $277. If this was higher, if this was in reverse and this was higher, I would go ahead and sell off the whole position because my hedge would have paid off. But my hedge is not paid off, so I don't do anything with it. And the other question is it on 100 days or lower? No, it's not. So my hedge is fine. It's in place. There's nothing to do there. Now I own 200 shares. I would ultimately, what I would like to do would be to sell the covered call at the $30 range or higher, and then I could sell 2 covered calls. But I don't think I can do that. Let's take a look at where we are. LI, where is it trading? Or so I'm going to go into the nearest expiration, and where can I collect? So at the 28.50, I can collect enough premium. I want to get at least 28 bucks. So I'm going to sell the 28.50. I can't sell the 30, but I'm going to sell the 28.50 because I was assigned at 28.50. So there's 2 places where I'm looking to write covered calls, at the $30 mark, which I can't, and the $28.50 mark, which I can. So I'm going to go ahead and do that now. I'm going to sell one. Let's see here if I can get 28 bucks. Okay, so I was able to get 28, barely enough to collect. Now, if this was lower, say it was only 20 cents that I could collect, then I would not have sold this covered call, and I would be, in essence, kind of stuck in a position. But when I get stuck, then I do what I would call the blaze of glory, which I would sell 2 covered calls at the money and maybe take, a little bit of a loss on the shares, but that's okay. I've got the system set up for that. I'm always collecting premium. ABC, always be collecting. So no matter what, I'm going to be collecting premium. I'm not going to sit stuck. But didn't get stuck here. I was able to sell a covered call. So that's good. And now we'll just see what comes in. I'll just come in next week. I literally don't look at this until the Friday when I come in the afternoon. And I go ahead and buy that little $5 call, and then I just literally don't look at it until Monday morning. So every Monday morning I come in and I look at this thing. So I'm not worried about anything. I don't think about it. It's just 100% mechanical. Okay. Let's see now if there's any questions or comments. I do see some. Dave says, good morning. Good morning, Dave. Will says, audio, good morning, Will, and the audio sounds good. And less is more says, sounds good, I appreciate that. Kevin, how you doing? Good morning. And some guy says good afternoon because he's in England, it looks like, right? And some guy says all, so I'm not sure why he said that. So see what Will has to say here. What's the expected win rate for the earnings edge? Are any of your filters affect the win rate? So what's the expected win rate? Well, based on the back test, it's just around 50%. So the goal is to have more winners than losers, but that's not as controllable as having the winners higher than the losers. So even if you had a 50% win rate, but you're winning more when you win, and you're losing less when you lose, as long as you have a 50% win rate or better, you're going to come out ahead. So that's the main controllable thing that seems to be more controllable with the earnings edge, is the fact that the winners are larger than the losers. But the back tests show around a 50% win rate, but in real life, the fact is that you can, when you back test right at a very specific time of day, and you just do it the same time every day. But if you're just looking at your account once a day or a few times a day sometimes, and you notice that you're up a certain level, you're like, you just take it. So it just seems like the win rates can be higher because of the fact that there's that little bit of, I'm just going to look at my account today, or I'm going to just look at it for, and today, right now, and then I'll look at it in another couple hours, because I just generally just look at it. I'm just always kind of looking at it, and you see that it's up. So you're just like, okay, I'm going to take profits. So there's that aspect of it that really helps the win rates be a little higher than what they were in the back test. Now you say, are any of your filters, do they affect the win rate? Like something about that stock history? Or is it win rate just related to your structure? The win rate's just related to, there's no way of predicting what's going to happen when you put on one of the earnings edge trades. you don't know if it's going to be a winner or a loser. You don't have any kind of you all you can do is filter up to the best that you can do, and most of the time you know that these types of trades are winners, but it's not necessarily it's more related to the structure. It's not related to the actual stock. The stock itself really has nothing to do with it. The stock's either going to move more, it's going to move a little bit, or it's not going to move at all. So when it doesn't move at all, that's when you can take a loss. But we have some edges in place to where those losses become very minimized because of the way the system works. And most of the time, you do get some type of movement in the stock. So if you get just a regular movement, not an outpaced higher than normal movement, just a regular movement that regularly happens with that stock, you will come out ahead. So we're just looking for regular movements. Now, if we get less than a regular movement, which can happen, that's when we typically will take a loss. Some guy says win rate may be influenced by the level where you take profits. True, my win rate on the earnings edge this year is 56%, but my overall win rate since July of 2023 is 53%. So you're around that 50% win rate, but obviously your winners are larger than your losers. I know because I see what you talk about in the forum, and you're ahead. So obviously your winners are larger than your losers, even though you're around that 50% win rate. Dave says, on the safe wheel on Fridays, why do we not consider rolling the put if we're close to being assigned? You could do that, but I'm trying to maximize the amount of money that I'm going to make. So I want to capture all the premium that I sell. I also want to keep the system very simplified. And if you start rolling like that, now it's hard to create a flow chart and make things very systemized. And it just really makes it kind of makes it things messy. That's my first thought, because I need to keep it simple. And then also, of course, rolling, now there's all kinds of things that you have to consider when you start rolling. But it's not a bad idea. I mean, you can do that, but eventually, uh, if you don't want to roll for a debit, right? So you want to roll for a credit. As long as you can roll for a credit, you'll probably be okay doing that. But eventually, it's going to be a point where you can't roll for a credit. That's always going to happen. So you want to be prepared for that. I'm okay just taking the shares and selling calls, and just having a whole complete system that I could backtest is easier to backtest, and then knowing what kind of results I'm going to be looking at. But if you start rolling and things like that, how do you backtest that? Now it makes it really complicated. I'm not saying it's a wrong thing to do, but it just complicates everything. Will says, for the safe wheel, when at 200 shares, what do you think of selling two calls at the average of both? Yeah, I've considered that. And you can see the average of both on this is 29.25. But see, the problem is I can't sell a covered call at the 29.25 level right now, but I can sell one at the 28.50 where I did get assigned. So that's kind of the issue. Obviously, if I could sell two covered calls, that would be better because it's more premium. And then you could maybe take that blended rate, that blended cost basis into account. But right now, taking that blended cost basis into account, I wouldn't be able to sell any premium. So I just kept them separate. And again, that's another way to keep it more simplified. But yeah, I've thought about that too. Then you're asking if it's enough premium, or would you want to lose the asymmetry of trading the structure? So yeah, hopefully I answered that question about why I wouldn't do that. The main reason really is I wouldn't be able to sell any premium right now. And then now I've got to do like a blaze of glory kind of a thing where I'm selling at the money and just trying to get as much premium as I can and see if I get assigned or not. That's a good question. I think a lot of other people probably have that same question. And some guy says also if you trade one stock versus a number of stocks, so that has also to do with your win rate. So I think you trade more than one stock a week. You probably trade two or three or four stocks a week when they're available. And that kind of evens out the win rate probably faster, right? Because I'm only doing one stock a week or when they're available. So yeah, you've got more numbers. And so you're probably, making more money because you have the higher win rate, or not, the win rate's not higher necessarily, but the wins are higher than the losers. So if you do more, you're probably going to come out. And it's also a better way to diversify. If you're going to do a number of different stocks as opposed to just one stock, you are diversifying better. But it'll also keep your win rate probably more at the level of the expected, which is what the back tests were. This is more says, what strike do you have on the LI long call from Friday? 2850. So I think so you can see that LI is up 7% today. So when I probably laid in this long call here, LI was down, it was like $26 or whatever it was. Yeah, it was around $26. So I got the 2850 long call for only $5. Like it looks like it's trading at 28 dollars right now. So you can see it's significantly higher. I don't know why the trade price says 0 there. That doesn't make any sense. I paid about $5 for it. But you can see where the mark is here. The 2850 long call. Okay. Will says he's not first. Yeah, where's Shovel today? Dave says, I sent you an email yesterday about the EE. Okay, I'm pretty sure Avery has that and probably either responded, or if she hasn't responded, we'll take a look at that for sure. Well, have you heard of the philosophy of rich avoiding taxes and buy, borrow, die? Yeah, that's mainly like a real estate kind of a thing. I don't see that as more of as a stock thing. Thing with real estate, you're not very liquid. It's nice to get all that leverage, but you're just not too liquid with it. That's one of the main reasons why I like stocks or options. But you can't necessarily buy, borrow, die with stocks that I know of. Maybe there's some other method. I don't really get into details about that kind of stuff. I kind of stay in my lane. I'm actually a real estate broker in the state of California, but I don't practice. So I know a little bit about real estate, but I don't really dabble in real estate too much. I have a rental property. I've had multiple rental properties in the past. I've fixed and flipped properties in the past, but not my expertise. I mean, I can do it. I know I understand it, but it's not my expertise. Avery says, hit that like button. I want to remind you guys, hit the like button. If you like the fact that not only do I share my P&L, but also each individual trade system that I have has its own separate little account. So therefore, you know exactly how that system's doing. That's one of the things that I would love to see guys on YouTube, that they talk about how they make money. They make $15,000 a week doing this. Well, I mean, how much do you lose every week doing that? I mean, just because you make money doing that doesn't mean that your portfolio is making money, right? If it was, I'd probably see your equity curve, right? I'd probably see your P&L, but I don't see it. So there's a reason for that. But so basically, I'm trying to change this industry. And if you also agree with my philosophy, the best way for you to show that you agree with my philosophy is to hit a like button. And it's kind of easy to do, so hopefully you can do that. Is AI going to take Avery's job? I'm trying to see if it can do all these things that I need it to do, but it's not quite there yet at all. It's not even close to doing all the stuff that I have to do in the background. AI can't do it, so it's not happening. Unless this more says Avery is AI. Avery ChatGPT, his email response. Well, Avery's a real person because she's right there saying LOL. Unless a chatbot can do that. I don't know. Maybe in another year, we'll probably be able to act like a real person. Who knows? Okay. Any other questions or comments before I end the broadcast here? All right. Well, I always like to say in parting, if the P&L is not real, what else are they trying to conceal? I'll be back next week. We'll see you guys, and I appreciate you guys.